Most people assume traders fail because they don't have the right strategy or they haven't mastered technical analysis. We like to think the market simply outsmarted them, but the data tells a different story. Traders blow up their accounts because they lose emotional control and risk far too much capital on a single, impulsive trade. To fix this, you have to rewire your daily habits. We are going to use the 21-day trading discipline protocol. It is built on 3 actionable pillars: mathematical account protection, an emotional mastery routine, and a psychological reward system. You don't need expensive analytics software to do this. All you need is your active trading account and a basic spreadsheet journal. By executing this protocol, you stop treating the market like a casino. You start operating a structured, sustainable business where survival is mathematically built in. Step 1 is bulletproofing your position sizing. Before you take another trade, calculate your maximum risk and put a hard cap at 1 to 2% of your total account value. Here is why that exact limit matters. Even if you have a highly profitable strategy with a great win rate, statistical variance guarantees you will eventually face a streak of 5 or more consecutive losses. This chart shows a 5-trade losing streak. Risking 10% compounds into a massive 41% drawdown. Risking 1% creates a minor dip. The red curve shows climbing out requires a 100% return. The green line recovers with nominal gains. To execute this, you must translate that strict percentage into a hard, non-negotiable dollar amount for your stop loss on every single setup. When you enforce this limit, a normal losing streak is no longer a catastrophe. Strict position sizing mathematically guarantees your account survives the natural variance of the market. Step 2 is launching the 21-day habit loop. You are going to commit to logging every single trade you take for exactly 21 consecutive days. It is easy to get burned out by tracking too much data at once. To avoid that, start with a micro habit. Focus on logging just one detailed trade per day to build the routine. This spreadsheet is your central tool. Strategy notes document why you entered. The emotional notes are most critical, recording psychological triggers like FOMO or hesitation. There is a strict timing rule for this. You must make these journal entries immediately after closing a position. You cannot wait until the weekend to batch log your trades. If you wait, your memory distorts the reality of the trade. Capturing raw emotional data at the exact moment of execution prevents revisionist history, exposing the specific psychological triggers that cost you money. Step 3 addresses the biggest psychological trap in trading, linking your happiness and feeling of success exclusively to your profit and loss. To break that habit, we implement the process reward system. This structure rewires your brain's gratification loop, so you start craving rule following instead of winning. Here is how the reward side works. If you follow your position sizing and log your trades perfectly for a full week, you treat yourself to something you value, like a nice dinner or a small purchase. You claim this reward even if your trades lost money. Conversely, if you break your rules, like revenge trading or moving a stop loss, you enforce a strict penalty. This must be a physical or restrictive consequence, like doing a heavy set of push-ups or giving up social media for the day. Now map this system onto your 21-day timeline. Every day you follow the protocol, you check it off and build visual momentum. At the end of every 7-day block, on days 7, 14, and 21, your process-based reward is officially unlocked. By replacing the unpredictable dopamine hits of winning with scheduled, process-based rewards, emotional discipline becomes an automatic, permanent reflex. When you execute these 3 steps together, you strip the gambling elements out of market speculation. You operate with a mathematical safety net that absorbs natural market variance and a psychological roadmap that keeps you in complete control. Your next step is clear. Download a free trading journal template and calculate the exact 2% risk limit for your specific account size today. Then take your next trade. Log your emotional notes immediately and aggressively cross off day 1 of your 21-day protocol. Stop letting the market dictate your emotions and execute your trading business with unshakable discipline.